Entire ecosystem could suffer from a lack of confidence if these issues persist.
That makes sense. It's fascinating how regulatory scrutiny is also increasing, which can either stifle innovation or push projects towards better security.
Indeed, regulations can act as a double-edged sword. While they may bring more structure, they can also deter the very innovation that DeFi is built upon.
It's a delicate balance. What do you think are some of the essential measures that DeFi projects could implement to enhance security?
Well, first off, audits should be non-negotiable. A thorough, independent review can catch vulnerabilities before they become problems.
For sure. I know some projects are now opting for continuous audits, which seems like a smart move given the fast-paced nature of this market.
Absolutely. Continuous audits can help maintain security standards as code evolves, but they also require ongoing investment.
And with market conditions being cautious, securing funding for such measures can become a challenge for many projects.
True, it puts pressure on teams to prioritize short-term gains over long-term stability, which can be a risky strategy.
Yes, especially when we're seeing that the bedrock for large-scale growth hasn't stabilized yet. It's a tough crossroads.
Which makes it crucial for teams to identify their unique value propositions while also addressing security concerns proactively.
Right. So, do you think focusing on quality projects is the best approach for investors right now?
In this current climate, yes, quality over quantity can help mitigate risks significantly and protect investor capital.
That's an important point. It seems like the era of just chasing yields might be coming to an end.
Very much so. Now investors are becoming more discerning, looking at project fundamentals rather than just potential returns.
It's interesting how that shift in mindset could reshape the DeFi landscape. Do you think it will lead to more sustainable growth?
I believe so. A focus on sustainability and security will likely encourage innovation that aligns more closely with user needs.
And that could foster a more robust community of users and developers, which is what DeFi really needs right now.
Community engagement is key. Encouraging user feedback can help projects adapt and grow while building trust.
I agree. Speaking of trust, how do you think the narrative around safety is affecting new entrants to the market?
New entrants might be feeling hesitant, especially when they see headlines about exploits. It's crucial for projects to actively communicate their security measures.
That's a good point. Transparency is vital in rebuilding that trust, especially for those who are new to the space.
Without a doubt, it's all about managing perceptions while demonstrating real-time security efforts.
And that links back to the idea of quality projects. Those that prioritize safety will stand out in this environment.
Right. Investors are looking for assurance that their assets are safe, which means projects need to deliver more than just innovative features.
So, what do you think are some of the top criteria that investors should be looking for in quality DeFi projects?
First, look for a solid team behind the project. Their experience and transparency can say a lot. Next, examine their security measures.
Right, and also the community engagement aspect. Projects engaging in active dialogue with their users tend to be more trustworthy.
Very true. It's also vital to consider their governance model. A decentralized and transparent governance structure is a good sign.
Yes, especially as we see increasing governance weaknesses across the board. Strong governance can lead to better decision-making.
Absolutely. And finally, the project's roadmap should be realistic yet ambitious, reflecting their long-term vision while being adaptable.
Well said, but how can investors differentiate genuine innovation from mere hype?
Good question. It often comes down to the substance behind the marketing. Deep dives into their tech and user reviews can reveal a lot.
So it's about peeling back the layers, right? Digging deeper than surface-level claims to find the real value.
Exactly. The crypto space can be noisy, but taking the time to research can yield valuable insights for investors.
And it's not just about finding the next big thing, it's about identifying projects that will still be around in the long term.
Totally. Long-term stability and potential should always be a priority for investors, especially in uncertain times.
So, as we look toward the future, do you think we'll see a consolidation within the DeFi space?
Consolidation seems likely as weaker projects either get acquired or fade away, which could streamline the ecosystem.
That could potentially lead to a stronger network of protocols that are more resilient and capable of withstanding scrutiny.
Definitely, the stronger players will likely emerge, taking the lessons learned from this cautious phase to drive innovation.
And those lessons are going to be crucial for the next wave of DeFi tools and protocols that come to market.
Absolutely. Adaptation and security have become the cornerstones for any DeFi project aiming for longevity.
Well, it seems like we've only scratched the surface of what the future holds for DeFi. There's a lot to consider.
Indeed, and as the landscape evolves, it will be interesting to see how teams respond to both challenges and opportunities.
I think it's safe to say that while the cautious phase presents hurdles, it also offers a chance for refinement and growth.
Absolutely. With a more cautious approach, we can hope for a more resilient DeFi environment in the future.
That's a hopeful perspective, Chase. I'm eager to see how this all unfolds in the coming months.
Me too, Sabrina. It's a pivotal time for the DeFi space, and I'm optimistic about what's to come. One key aspect to consider is the importance of security audits for DeFi projects. As the number of exploits rises, teams need to prioritize comprehensive audits and demonstrate transparency to build trust with users.
That makes sense, Chase. Security audits could serve as a badge of honor for projects, helping to differentiate quality protocols from those that might be more susceptible to risks.
Exactly, and we're seeing some projects invest heavily in this area. However, audits alone aren't a silver bullet. Teams also need to establish robust governance structures to handle potential vulnerabilities.
That brings up an interesting point about governance mechanisms. Weak governance can lead to poor decision-making, especially during crises. Have you seen any innovative models addressing this?
Yes, some projects are trialing decentralized autonomous organizations or DAOs to empower community governance. However, these structures can also face challenges, particularly when dealing with large-scale decisions.
It's fascinating how governance can really make or break a project. The balance between decentralization and effective leadership is such a tightrope walk.
Right, and it's not just about the technology, it's also about the culture that the team fosters within the community. Engaging users in decision-making processes often strengthens the project.
Community engagement is crucial indeed. It's a significant factor in building loyalty, especially when users feel they have a stake in the platform's future.
Absolutely, Sabrina. However, we must also acknowledge that community sentiment can shift quickly, particularly in a volatile market. Misinformation can easily sway opinions.
That's a significant concern. How do you think projects can combat misinformation effectively?
Consistent communication and transparent updates are essential. Projects should prioritize educational outreach to ensure users understand the evolving landscape and potential risks.
Education could foster a more informed user base. But in a space that's constantly evolving, do you think it's realistic to expect users to keep up?
It's a challenge for sure. Project teams can help lessen the burden by providing easy-to-understand resources and hosting regular AMAs or webinars to address user concerns.
That sounds like a solid strategy. However, I wonder if the pace of innovation might outstrip even the most diligent efforts to educate users.
True, the rapid pace of change can overwhelm even seasoned investors. Users must learn to assess risk-reward scenarios quickly and develop a more adaptive strategy.
Adaptive strategies could involve diversifying portfolios based on risk tolerance, but how can investors evaluate which projects are worth the risk?
Analyzing the team's background, project transparency, and community engagement are key indicators. Investors should also look for projects that have established partnerships and real-world use cases.
Partnerships can indeed signal credibility, but it's also crucial for those partnerships to result in tangible benefits for the user.
Exactly, and metrics like user growth and transaction volume can provide insights into a project's viability. It's a mix of qualitative and quantitative assessments.
That blend of analysis can be complex. But as you mentioned earlier, governance and security are foundational elements that shouldn't be overlooked.
Right, a strong foundation allows for innovation to flourish. Without it, the risks can outweigh the rewards, leading to a shaky ecosystem.
It's all interconnected, and I fear that a few high-profile failures could shake investor confidence across the board.
That's a valid concern. Market psychology plays a significant role in DeFi, and fear can lead to sudden withdrawals that further destabilize the market.
Certainly, and this could trigger a downward spiral if not managed properly. What mechanisms do you think could mitigate such panic?
Implementing circuit breakers or liquidity pools can act as a buffer against sudden market swings. These mechanisms need to be well publicized to reassure users.
Such safeguards could definitely provide some peace of mind. However, implementation must be seamless to not create friction for users.
Absolutely. The user experience must remain smooth, especially as new users are entering the space. Complicated processes could deter participation.
User-friendliness could indeed be a decisive factor in attracting newcomers. Simplifying on-ramps and interfaces could help demystify DeFi.
Exactly. Intuitive design can make a huge difference. However, teams must also balance simplicity with the complexity of DeFi functions.
It's a delicate balance to strike. But ultimately, functionality and security should remain the priority, even in the face of simplification efforts.
I concur. If projects can deliver a secure yet user-friendly platform, they may set themselves apart in this crowded landscape.
Indeed. And as barriers to entry lower, we might see an influx of diverse participants bringing new ideas and innovations.
That's the beauty of decentralization. Different perspectives can lead to groundbreaking solutions that might address current inadequacies.
Yes, fostering diversity can inspire creativity. But do you think there's a risk of too many ideas diluting the effectiveness of solutions?
It's possible. When too many voices compete, it can lead to noise rather than constructive dialogue. Clear focus may be necessary for coherent development.
Focus could be the key to effective implementation, yet innovation thrives in chaos. It's an intricate paradox.
Absolutely. Perhaps establishing task forces around specific challenges could harness diverse input while maintaining direction.
That's a pragmatic approach. Focusing on particular issues could streamline efforts and produce tangible outcomes.
Precisely. Such focused collaborations could also build community spirit, as users feel they're part of solving real-world challenges together.
Community-driven problem-solving could shift the narrative from merely speculative investments to meaningful contributions.
Yes, and it could reinforce the notion that DeFi isn't just about financial gains. It's about reshaping how we think about finance altogether.
A paradigm shift in finance is profound. However, it will take time for mainstream adoption, especially given the regulatory headwinds.
Regulatory scrutiny can be a double-edged sword. While it may bring legitimacy, it could also stifle innovation or push projects offshore.
Exactly, it's a tricky landscape, and teams may need to navigate these waters with caution while advocating for clear regulations.
True, collaboration with regulators could help bridge the gap. Projects should engage in constructive dialogue to align interests.
Engaging regulators is essential for long-term sustainability. Without mutual understanding, the industry risks being stifled by outdated frameworks.
Authentic collaboration could lead to more adaptive regulatory frameworks that accommodate innovation while protecting users.
That could create a win-win scenario, but it requires active participation from all stakeholders, which can be challenging to organize.
Indeed, it also demands patience and transparency from the projects involved. Otherwise, mistrust can grow in both user and regulatory circles.
Trust is a precious commodity in this space, and it must be earned through consistent actions, not just words.
Absolutely. Actions speak louder. Projects that consistently prioritize security and user education are likely to build long-term loyalty.
Long-term vision is crucial, especially in an environment that often emphasizes quick profits. Balancing short-term and long-term interests is essential.
Well said, Sabrina. Projects that can maintain this balance are more likely to withstand market fluctuations and emerge stronger.
A resilient DeFi ecosystem rests on the principles of responsibility and innovation. It will be intriguing to see who rises to the occasion.
Indeed, and as we continue to witness this evolution, the lessons learned will shape the future of decentralized finance.
I can't wait to delve deeper into these developments. The future of DeFi is indeed full of possibilities, albeit with inherent risks.
Absolutely, and that juxtaposition of risk and reward is what makes this space so fascinating to analyze.
It's like we're witnessing the birth of a new financial paradigm, and it's both exciting and daunting at the same time.
It's crucial to recognize the balance between innovation and security in DeFi. While the potential for high returns can be alluring, we must remain vigilant about the underlying risks.
Right, and with the recent incidents, it feels like the entire ecosystem is under a microscope. Investors are becoming increasingly cautious, which could slow down the rapid pace of innovation.
Exactly, and this scrutiny may lead to more robust standards. The protocols that can demonstrate transparency and resilience will likely attract more attention.
But it raises the question, how can investors differentiate between quality projects and those with vulnerabilities? There's a lot of noise out there.
A thorough understanding of governance mechanisms is key here. Projects that have a proven track record of managing risks effectively will stand out in this environment.
That makes sense. With governance being so central, how do you see community involvement evolving in response to these challenges?
Community involvement is likely to increase, especially as investors demand more accountability. Decentralized governance models that prioritize security will gain traction.
It's interesting to think about how these dynamics will shape user trust. If projects can engage their communities effectively, they might weather the storm better.
Certainly, trust is paramount in financial systems, and in DeFi, it can be fragile. Fostering a culture of accountability will be essential for long-term success.
Speaking of trust, how do you view the rising regulatory scrutiny? Is it a double-edged sword?
It is indeed a double-edged sword. Regulations can bring legitimacy and protection, but they can also stifle innovation if not crafted thoughtfully.
Exactly. And there's a fine line between protecting consumers and over-regulating the space. Finding that balance will be pivotal.
Moreover, proactive compliance can also differentiate projects in the crowded DeFi landscape. Those who embrace regulation may draw in more institutional investors.
That's a compelling point. Institutional money could really change the dynamics. But will these investors be comfortable in such a volatile space?
It's a valid concern. Institutions typically require more stability and security, which is why quality projects with strong frameworks will be more attractive.
And we must also consider how retail investors react to this cautious environment. Will they continue to engage with DeFi or retreat to traditional finance?
That's a crucial aspect to examine. Retail investors may be more skittish, often reacting to headlines and perceived risks rather than the underlying technology.
You're right. If there's a perception of instability, many might opt for safer options. That could have serious implications for DeFi's growth.
Indeed, we could see a bifurcation where only the most resilient projects thrive. The fallout may force the hands of weaker players to either improve or exit.
And that could ultimately lead to a healthier ecosystem. Fewer but more robust participants might be a better long-term scenario.
Absolutely, the survival of the fittest mentality can drive innovation toward more sustainable practices. It may be a painful process, but growth often comes through overcoming hurdles.
So, in this cautious phase, which sectors within DeFi do you see as having the highest potential for innovation and growth?
I believe lending and borrowing protocols will continue to evolve significantly. They hold a central role in DeFi, and improvements in risk assessment are likely.
That's a logical choice. They're foundational to the ecosystem. But how about liquidity pools? They seem to be facing increasing scrutiny.
Liquidity pools are indeed under pressure, especially regarding impermanent loss. However, innovations in automated market making could address these concerns.
Interesting. If projects can solve these issues, could liquidity pools regain favor? It's a risk-reward balance for investors.
Exactly. And if these projects can demonstrate consistent yield with lower risk, they may attract both retail and institutional investors.
That would be a turning point. But until then, education will be vital for investors. They need to understand the mechanics behind these products.
Yes, educational resources and community engagement can empower investors to make informed decisions, potentially minimizing panic during downturns.
A well-informed investor base can be crucial, especially as misinformation spreads rapidly in the crypto space.
Absolutely, and it's not just about being informed on the projects themselves, but also on broader market trends that can impact investments.
Indeed, awareness of macroeconomic factors is essential, as they can significantly influence sentiment in the DeFi market.
That's a pivotal insight. The intersection of traditional finance and DeFi is becoming more pronounced as market actors increasingly adopt digital assets.
Yes, we are witnessing a paradigm shift. As traditional finance reacts, it creates both opportunities and challenges for DeFi projects.
It's important to stay adaptable. Projects that can pivot in response to market conditions will have a better chance of thriving.
Flexibility is key. However, transparency will need to accompany those pivots. Investors can only support what they understand.
Well said. Transparency can build trust, especially if projects are open about their risk management strategies and decision-making processes.
And that trust can be a differentiator in a crowded space. Projects that prioritize clear communication may find themselves leading the pack.
Exactly. As the DeFi landscape evolves, those who establish a strong brand based on trust and transparency are likely to capture significant market share.
That sounds promising, but I wonder how many projects are genuinely committed to these principles. the temptation to cut corners can be high.
It's a valid concern, and that's where due diligence comes into play. Investors need to scrutinize project fundamentals before diving in.
Right, and understanding the team behind the project can also provide insights into their commitment to transparency and security.
Absolutely, a strong team with a proven track record can often be a good indicator of a project's potential longevity and resilience.
But even with strong teams, unexpected challenges can arise. Contingency planning is vital for navigating this volatile landscape.
Indeed, a proactive approach to risk management can be the difference between success and failure in this rapidly changing environment.
So, do you think there's a need for more frameworks or standards in the DeFi space to help guide these emerging projects?
Definitely, standardizing frameworks could help set benchmarks for security and governance, making it easier for investors to assess risks.
That makes sense. If the industry can self-regulate to some extent, it may reduce the burden on external regulators.
Exactly, and it could foster a collaborative atmosphere among projects, where knowledge sharing leads to stronger overall standards.
And a cooperative environment could elevate the entire industry. After all, DeFi's success is interlinked. It thrives on interconnectedness.
True, the rising tide lifts all boats, so to speak. A more resilient DeFi ecosystem can only strengthen its legitimacy in the financial world.
As exciting as all this sounds, we must remember to remain cautious. Unforeseen events can shake the industry at any moment.
Absolutely, and adaptability is the key to navigating uncertainty. Those who remain agile will be more likely to find success amidst challenges.
We'll see how it all unfolds, but for now, staying informed and engaged with developments is crucial for anyone involved in DeFi.
Indeed, continuous learning will empower investors to make well-informed decisions in this dynamic landscape.
I look forward to seeing how the community responds. Their actions now could define the future trajectory of DeFi.
You know, Sabrina, one of the biggest lessons we've learned from past DeFi failures is the importance of robust audits. A lot of projects skimp on this critical step, thinking they can scale quickly without addressing potential vulnerabilities.
That's true, Chase. And with the rise of automated tools and smart contracts, the complexity increases, which often leads to oversight in security protocols. This is where the community needs to push for higher standards.
Exactly. Protocols that prioritize their security posture will likely weather these storms better than those that don't. Users need to be vigilant and prioritize platforms with clear security credentials.
And transparency plays a huge role in that, right? Investors should have access to the detailed security audit reports of any platform they're considering, so they can gauge the risk themselves.
Definitely, transparency builds trust. Many protocols have started publishing their audit results, which is a positive trend if we want to see broader adoption.
But even with transparency, there's the issue of governance structures, as you've mentioned before. Weak governance can lead to disastrous decisions, especially in turbulent times.
True, and governance tokens can sometimes skew power dynamics unfairly, leading to centralization in a space that promotes decentralization. It's a tricky balance.
And it raises the question of whether community-driven projects can truly prioritize the interests of all their users. What's your take on that?
Well, I think it requires ongoing dialogue among stakeholders. When everyone has a voice, it can lead to better decision-making, but it also demands responsibility and genuine engagement.
That's a fair observation. It's crucial for projects to foster inclusive communities that encourage participation in governance. But not every protocol is designed for that.
Right, and that's where we see the divergence in success between projects. Those that cultivate an active, informed community tend to perform better in the long term.
It's all interconnected, isn't it? User trust, governance, and security practices all combine to create a resilient ecosystem.
Absolutely. If one aspect falters, it can bring down the entire system. It's why the recent scrutiny from regulators could be a double-edged sword.
Yes, it's a delicate balancing act. On one hand, regulation could enforce better practices. On the other, it could stifle innovation by creating barriers to entry.
That's the conundrum. We need regulations that protect users without infringing on the decentralized nature of the tech. It's a tough needle to thread.
And how do you think the community will react if more stringent regulations come into play? Will they adapt or push back?
Historically, communities in DeFi have been quite resilient. If the regulations are reasonable, many will adapt and even thrive, but there will always be a faction resistant to what they perceive as overreach.
It's fascinating to witness the evolution of community response. Some groups rally for better compliance, while others continue to push for total decentralization.
Yes, and those opposing forces can lead to either fragmentation or innovation. It often depends on how the conversations unfold.
As conflicted as it sounds, that tension could actually drive forward-thinking solutions. It's the nature of a constantly evolving landscape.
Indeed, and let's not forget the role of education. The more investors understand the risks and innovations, the better equipped they'll be to navigate these waters.
Talking about education, what resources or platforms do you think are best for keeping up to date on DeFi trends?
There are quite a few. Following reputable crypto news outlets, engaging in community discussions on platforms like Discord, and utilizing educational sites that offer courses can be incredibly beneficial.
It's important to strike a balance between staying informed and not getting overwhelmed by the noise. Some platforms certainly help with that.
Absolutely. Filtered, concise information is key. Also, leveraging tools that aggregate data and insights can help investors cut through the clutter.
That's where community-driven platforms shine, right? They can provide real-time insights based on peer experiences and collective knowledge.
Exactly, crowd wisdom can be profound in this space. Discussion forums and social media channels are often where you find the most nuanced insights.
But of course, one must approach those insights cautiously. Misinformation can spread quickly if not properly vetted.
Well said. It's essential for investors to develop critical thinking skills and question the sources of their information.
It's a learning curve, like everything in crypto. Those who embrace this learning will be the ones who succeed in the long run.
Exactly. Each challenge presents an opportunity for growth and innovation. The DeFi landscape is still in its infancy.
And regardless of the hurdles, there's always potential for groundbreaking developments. That's what keeps the community vibrant.
For sure, every challenge in DeFi is also a chance to rethink solutions. The innovators who see it that way will carve out the future.
And speaking of innovation, what recent advancements have stood out to you in the DeFi space?
I've been really impressed by the growth of decentralized insurance protocols. They address a critical gap by providing risk coverage that's often overlooked.
Insurance in DeFi is a fascinating topic. It's like creating security nets for the ecosystem, which adds another layer of trust.
Exactly. Plus, it incentivizes more users to engage with protocols they might find too risky otherwise.
And it broadens the appeal of DeFi to those who may have been hesitant due to security concerns.
Precisely. When users feel protected, they're more likely to explore the full potential of what DeFi has to offer.
I think the future will show an increasing number of these insurance solutions as a response to the current market's risk concerns.
Absolutely, and that's where the market will evolve. Think tank collaborations between developers and risk managers could yield groundbreaking innovations.
The synergy between diverse professionals is crucial. We need to think cross-disciplinarily to address all the nuances of risk.
Well said. The future of DeFi requires a multifaceted approach that combines financial acumen, technical know-how, and regulatory insight.
And that interplay will inform how future innovations are crafted. The adaptability of teams will be a significant determinant of success.
Exactly. Those who can pivot and respond to external pressures are likely to emerge as leaders in the next phase of DeFi.
It's an exciting time, albeit a cautious one. Still, the potential for disruptive change is palpable in the air.
Indeed. As we move forward, it's critical to keep our ear to the ground and stay engaged with the pulse of the community.
Absolutely, Chase. Keeping a close watch on both the technological advancements and the regulatory developments will be essential for navigating the future of DeFi.
Well put, Sabrina. The interplay of innovation and regulation will shape how we define and understand DeFi in the coming years.
And as we continue to monitor this landscape, we must remain vigilant against complacency. The stakes are too high for passive engagement.
Absolutely. Continuous engagement will be key for anyone wishing to thrive in this ever-evolving ecosystem.
I look forward to diving deeper into these developments with you in future episodes, Chase. There's so much to unpack.
Me too, Sabrina. The journey ahead is filled with possibilities, and I'm excited to explore them together with our listeners. It's interesting how security concerns are shaping the narrative around DeFi at this moment. Many users are starting to prioritize safety over the potential for high returns.
Exactly, Chase. This shift in focus could lead to a more mature market, but it also creates challenges for projects that rely heavily on high-risk strategies.
I believe we will see a rise in projects that emphasize transparency and robust security measures to regain user confidence. This is crucial for the health of the entire DeFi ecosystem.
True. And as we see increased regulatory scrutiny, innovative projects will need to adapt without losing their edge. Balancing compliance and innovation will be a tightrope walk.
Right, and the potential for regulatory hurdles might drive smaller projects to rethink their strategies. It's a delicate balance between staying innovative and remaining compliant.
Moreover, governance weaknesses often expose protocols to serious risks. Decentralized governance needs to evolve to ensure that projects can adapt quickly to the changing landscape.
Absolutely, there are already discussions around how to implement more effective governance frameworks, especially in the face of rising exploit volumes.
Plus, those governance structures must be designed to prevent the dominance of a few large holders. Otherwise, we could see centralization creeping back into DeFi.
That's a valid point. We should keep an eye on protocols that are exploring novel governance models that encourage wider participation and reduce central risk.
And let's not forget about community education. Enhancing users' understanding of risks is crucial in this cautious phase.
Indeed, educated users are less likely to fall victim to scams and hacks, which ultimately contributes to a healthier ecosystem.
I think the recent incidents have already sparked a conversation on risk management practices among DeFi enthusiasts.
Yes, and we've seen some projects pivot their marketing towards risk mitigation rather than just flashy returns. It's a sign of the times.
Exactly. And as the market becomes more discerning, we may see a rise in funding for projects focusing on security and auditing.
Security audits have always been important, but now they're almost a must-have for gaining user trust. A solid audit can validate the project's integrity.
This evolution might also push platforms to adopt insurance mechanisms against exploits. It could add an additional layer of safety for investors.
That's a fascinating idea. Having insurance in place could significantly bolster user confidence. It's something that might attract a more traditional investor base.
And yet, the insurance models themselves need to be robust to withstand the peculiar risks inherent in DeFi. Not all insurance products are created equal.
True, and as the landscape matures, we'll see differentiation among insurance offerings, with some becoming more sophisticated than others.
Moreover, the tools for risk assessment are becoming increasingly sophisticated too. Data analytics will play a key role in informing investor decisions.
Absolutely. By harnessing data analytics, users can make more informed decisions and potentially identify high-risk investments before they become problematic.
This data-driven approach could also empower smaller investors who previously felt overwhelmed by the complexities of the market.
Yes, and with the right tools, they can navigate the space more confidently. It's an exciting time for user empowerment in DeFi.
But as we empower users, we must also highlight the importance of thorough research. Relying solely on tools without understanding the fundamentals could be dangerous.
Definitely. Users must strike a balance between utilizing tools and cultivating their own understanding of the projects they're investing in.
And the responsibility also lies with the projects themselves to provide clear, thorough information and not just hype.
Exactly. Transparency can make all the difference. Trust is built through consistent, honest communication from projects.
It's also about setting realistic expectations. Many investors come in with the mentality of getting rich quick, which can lead to rash decisions.
That's a common trap. Promoting a culture of long-term thinking could benefit the whole ecosystem and lead to less volatility.
Agreed. If we can shift the narrative from quick gains to sustainable growth, it may foster a more resilient market.
That's the crux of it. Resilience in the DeFi space will be paramount for its survival and future growth.
As we've discussed, innovation can't happen in a vacuum. It must adapt within a framework that values both creativity and security.
Well said, Sabrina. And as we push for innovation, we must ensure these advancements don't compromise the core principles of decentralization.
Indeed, it's a delicate balance, and we'll have to scrutinize how various projects approach this as they scale.
Moreover, the DeFi space is interconnected. What happens with one protocol can trigger effects across the entire ecosystem.
That interconnectedness amplifies risks, making it even more critical for projects to collaborate on security practices.
Collaboration could be a key factor in addressing shared vulnerabilities. A unified front will be essential for restoring confidence.
Absolutely. DeFi protocols must work together to create an ecosystem where risks are minimized and benefits are maximized.
And with initiatives like decentralized insurance models and security auditing, there's hope for a more balanced approach moving forward.
We might see a wave of innovation in risk management tools designed specifically for DeFi, catering to both users and developers.
That would be a welcome trend. Projects that prioritize user safety and education will likely emerge as leaders in the space.
And as we know, educating users is also an ongoing process. Continuous learning will help everyone keep pace with rapid changes.
Exactly, and community engagement will play a vital role in this education. The more informed the community, the more resilient the ecosystem.
It's almost like nurturing a garden. You have to continually tend to it for it to flourish, particularly in such changing conditions.
Well put, and this gardening approach can help instill a culture of responsibility among users, motivating them to actively participate.
This active participation can also translate into more robust feedback loops for projects, allowing them to iterate rapidly on their offerings.
And listening to community feedback is critical for a DeFi project's success. It can lead to an agile development process.
This cycle of feedback and adaptation is what will ultimately define the next chapter of DeFi performance.
And we can only hope that this leads to a marketplace that is not only innovative, but also secure and user-friendly.
In the end, the evolution of DeFi will hinge on how well it can integrate safety measures, while still pushing the envelope of what's possible.
Well, Sabrina, I believe we're on the cusp of a new wave of DeFi innovation driven by these very discussions.
Absolutely, Chase. It's exciting to think about how these conversations will shape the landscape in real time.
I look forward to unpacking these developments and the implications they have for the crypto community. It's an evolving story.
Me too, Chase. And for our listeners out there, we hope this discussion sparks further conversations and insights within your communities.
Indeed, remember, staying informed is your best defense in navigating the DeFi space.
And as always, we encourage our listeners to reach out with questions or topics they'd like us to explore in future episodes.
We appreciate your engagement and look forward to bringing you the latest insights from the ever-evolving world of DeFi.
Thanks for tuning in, everyone. Until next time, stay curious and crypto-informed.
It's interesting to see how many developers are still pushing forward with innovative solutions in DeFi, despite the risks. You know, some projects are addressing these governance weaknesses directly by implementing more robust frameworks.
Right. And this is where transparency becomes critical. Projects that offer clear documentation and audits are likely to gain the trust of users who are naturally more cautious now.
Exactly, Sabrina. Trust is everything in this space, and those who can provide proof of security protocols are likely to stand out. It's also noteworthy how the increased scrutiny from regulators could lead to a more mature ecosystem.
Definitely, Chase. However, some argue that excessive regulation might stifle innovation. Finding that balance between protection and growth is going to be key for the future of DeFi.
That's a valid point. The challenge will be fostering an environment that allows for experimentation while ensuring user safety is prioritized. This is especially important given the recent uptick in exploit volumes.
Speaking of exploits, have you noticed how certain projects have been targeted specifically? It often feels like low-hanging fruit for attackers who exploit governance weaknesses.
Absolutely. Attackers tend to focus on projects with less robust governance mechanisms as they are easier to manipulate. It really highlights the need for decentralized governance models that are effective and resilient.
True, and some protocols are exploring novel governance features like quadratic voting to enhance representation and decision-making. But will these be enough to deter attackers?
That's the million-dollar question, isn't it? Implementing these features must go hand in hand with robust security audits and community engagement to ensure they're effective.
And as we've seen, community involvement can create a stronger defense against attacks. When users feel invested, they're more likely to actively monitor and report suspicious activities.
Community vigilance is indeed a powerful tool, but it can't be the only line of defense. Projects need to incorporate multi-layered security strategies to protect their users.
Speaking of multi-layered strategies, what are your thoughts on insurance protocols emerging in the DeFi space? They seem to offer an additional layer of security for investors.
Insurance protocols are fascinating, but they also have their own risks. The challenge lies in ensuring that the insurance contracts are backed by sound financial models and are not exposed to the same vulnerabilities as the underlying assets.
That's a great perspective. It could create a false sense of security if users think they are fully protected without understanding the limitations of these insurance products.
Exactly, Sabrina. Education is vital to ensure that users understand what they are buying into, and that insurance products are not a panacea for all risks in DeFi.
And what about the rising regulatory scrutiny? Do you believe it will ultimately benefit the sector by weeding out poorly designed projects?
In the long run, yes, but in the short term, it might create uncertainty. Some projects may struggle to adapt to regulatory frameworks, leading to a temporary consolidation in the market.
That's a crucial point. A shakeout could lead to more reliable players emerging, which might reassure both users and institutional investors.
Indeed, and as larger institutions begin to participate, they will demand higher standards for security and transparency, which might help elevate the entire ecosystem.
Absolutely, but we must also consider the potential for regulatory overreach. If regulators impose too strict a framework, it could push innovation and projects offshore.
That's a danger we must keep an eye on. The decentralized nature of DeFi means that innovation could thrive in jurisdictions with more favorable regulations.
And that could create a fragmented market where users are left navigating a patchwork of regulations, which might counteract the very principles of DeFi.
Precisely, and that's why the dialogue between regulators and the DeFi community is so important. Constructive engagement could lead to a framework that protects users without stifling innovation.
So when it comes to investing in DeFi right now, caution seems to be the prevailing attitude. What are your thoughts on what strategies users should adopt?
Investors should be looking for projects that emphasize transparency, robust security, and a strong community. Diversifying their exposure while maintaining a close eye on market trends is crucial.
And perhaps focusing more on established protocols rather than chasing after the latest hype can provide a sense of stability amid the ongoing volatility.
That's always a sound strategy. However, it doesn't mean one should completely disregard emerging projects. Due diligence is key to striking that balance.
Could you elaborate on what good due diligence looks like in this context? It seems to be a lost art for many.
Of course, good due diligence involves evaluating a project's white paper, understanding its technology, and checking for audits. Investors should also assess the team behind the project and their track record.
That makes a lot of sense. Maybe we can encourage our listeners to develop a checklist that they can use to evaluate projects before diving in.
Great idea. A checklist could help demystify the process and give them a clearer path to assessing the various factors at play.
And it can also serve as a reminder that investing in DeFi isn't just about the potential high returns, but also about understanding the associated risks.
Absolutely. The appeal of high yields is alluring, but sustainability is the name of the game in the long run. High returns often come with high risks.
So true. It's important for investors to align their risk tolerance with their investment choices in the DeFi space.
Exactly, and that's why continuous education is critical. The landscape is ever evolving, and knowledge is a powerful tool for mitigating risks.
And speaking of education, podcasts like ours can play a role in sharing insights and sparking conversations. Don't you think?
Absolutely, Sabrina. We're here to bridge the knowledge gap and provide listeners with the tools they need to navigate this complex environment.
Our role as educators is essential, especially as the DeFi landscape continues to grow and change.
I couldn't agree more. Staying ahead of trends and understanding the risks allows investors to make informed decisions.
And that, in turn, can contribute to a healthier, more sustainable DeFi ecosystem.
Absolutely. A well-informed community is more likely to support high-quality projects and hold them accountable.
And that accountability can lead to better practices and, ultimately, a more robust market.
In essence, informed investors can help shape the future of DeFi and push for the changes that benefit everyone.
It's a collective effort, and each person's awareness and actions can ripple through the entire ecosystem.
Well said. As we wrap up, I hope our listeners carry these insights into their DeFi journeys.
Absolutely. Remember, whether you're a seasoned investor or just starting, always prioritize knowledge and risk management.
And with that, stay curious, stay informed, and be safe in the DeFi space.
Thank you for joining us in this deep dive today. We hope new altcoins that are attracting attention. Do you think there's potential for smaller projects to break through?
There's always potential, but it requires a careful approach. The market can be unforgiving, and investors need to conduct thorough research before jumping on any bandwagon.
That's sound advice. It's easy to get caught up in hype, especially when there are social media influencers touting the next big thing.
Absolutely. Always remember that social proof doesn't equal value. It's essential to back claims with data and consistent performance.
Right. Also, market sentiment plays a huge role right now. Fear and uncertainty can lead to rapid sell-offs, especially in altcoins.
You've hit the nail on the head. Emotional trading often leads to missed opportunities or unnecessary losses.
This cautious phase might also lead to a shakeout. weeding out those projects that lack strong foundations.
Indeed, a shakeout can help reset the market. It allows stronger projects to emerge with a clearer pathway.
It's a bit like a cleansing process, isn't it? But it could be painful for many short-term traders.
Painful, yes, but often necessary. Those who endure may find themselves rewarded in the long term.
Speaking of rewards, how do you view staking and yield farming in this cautious climate?
Staking and yield farming can be attractive options for those looking to earn passive income. However, it's essential to evaluate the risks associated with each protocol.
Risk assessment is critical. Some yields may seem attractive, but could be fraught with hidden pitfalls.
Exactly. The potential for high returns often correlates with the degree of risk taken. Diversification is key.
That's a prudent strategy. In times like these, riding the waves of more stable assets while cautiously exploring altcoins might be wise.
Definitely. It's about balancing risk while remaining open to opportunities. Keeping an eye on market trends is crucial.
As the landscape shifts, those who adapt quickly tend to navigate through turbulent times better.
For sure, investors need to be agile and willing to pivot their strategies as new data emerges.
And let's not forget the importance of community in the crypto space. Strong communities can lend support during uncertain times.
Absolutely. Community involvement can often be a signal of a project's longevity and trustworthiness.
It's fascinating how social dynamics can influence market movements. Have you seen any communities rallying around specific altcoins lately?
Yes, some projects do have passionate followings that can drive engagement and, in turn, price appreciation. It's a double-edged sword, though.
Right. While enthusiasm can boost a project, it can also lead to irrational price spikes and subsequent corrections.
Exactly. This is why it's vital to approach any investment with a balanced perspective.
Such balance can prevent emotional decisions, especially when market volatility peaks.
Being level-headed in those moments is crucial. It often separates successful investors from those who panic.
True. Staying focused on fundamentals can help steer clear of impulsive trades.
Well said. It's all about finding that equilibrium between instinct and analysis.
As we look ahead, do you think we'll see any major shifts in market trends?
It's difficult to predict, but emerging technologies like NFTs and DeFi could propel some altcoins into the limelight.
Definitely. Innovation tends to spark interest and can lead to significant capital inflow if executed well.
Exactly. As projects innovate and improve their offerings, investors will naturally want to participate.
So, in a way, it's a continuing cycle of innovation and investment, leading to greater adoption.
Yes, exactly. The ecosystem is ever evolving, which is why it remains a captivating space to watch.
And as we observe these changes, education will be vital for investors to make informed choices.
Absolutely. Knowledge is power, especially in a landscape that's as opaque as crypto can be.
The more informed the investor, the better equipped they are to handle market fluctuations.
Well put, ongoing education should be a cornerstone of any investment strategy.
And with resources readily available, it's more accessible than ever for people to stay informed.
Exactly. The challenge lies in discerning credible information from noise.
Indeed, critical thinking is a must-have skill for anyone navigating this space.
In summary, staying informed and patient is key during this cautious phase.
Absolutely. Let's keep an eye on how the market evolves and share insights with our audience.
Agreed. Regular updates will help everyone make better, more informed decisions. The current market dynamics really illustrate how investors are moving towards safety rather than speculation. We've seen how the Bitcoin rally created an air of optimism, but as soon as it retreated, caution took center stage.
Right. This shift often leads to a search for value among altcoins. But as you mentioned, the alt season index suggests a lack of broad interest. It raises questions about whether investors are truly confident in these alternatives.
Absolutely, and it's crucial to look at the fundamentals of any altcoin before diving in. Some projects have solid use cases and community support, while others may not survive in a bearish environment.
Indeed, it's like sifting through a vast sea of projects to find the gems. Without a clear focus, many investors might end up with tokens that lack long-term viability.
Exactly, and we've seen it before. Tokens that once soared can plummet just as quickly. This is where thorough research and understanding project fundamentals can save investors from heavy losses.
That's a good point. It's really about making informed decisions based on data rather than hype. The social media narratives can often lead to irrational exuberance.
Yes, and keeping an eye on market sentiment is just as important as technical analysis. Community discussions, developer activity, and news cycles can significantly influence price movements.
Speaking of news cycles, have you noticed how regulatory developments are impacting investor sentiment recently? It feels like every new piece of news causes a ripple effect.
Absolutely. Regulatory clarity can have a dual effect. On one hand, it brings legitimacy, but on the other, it can create uncertainty and fear among speculative investors.
That's true. And we need to highlight the importance of investor education on these topics. Many people jump into crypto without fully understanding the implications of regulations.
Indeed, fostering a culture of informed investing is essential. It can help mitigate panic selling during downturns and promote more rational decision-making.
Furthermore, looking at the macroeconomic environment is also crucial. Factors like inflation and interest rates can greatly influence market sentiment and investment flows.
Yes, macroeconomic indicators often have a trickle-down effect on crypto markets. Investors are increasingly treating cryptocurrencies as part of their broader asset allocation strategy.
And with that comes a more sophisticated approach to investing in crypto. Those who understand the interplay between traditional finance and crypto can potentially benefit from volatility.
Exactly, and volatility is something we need to embrace. It brings both risks and opportunities, but it requires a careful and strategic approach to navigate successfully.
This cautious phase could last a while, but it's also a period for learning and refining strategies. What are some of the practices you think investors should adopt during this time?
Well, diversification is key. Spreading investments across different asset classes can help mitigate risk and cushion against sudden market moves.
I agree, and having a clear exit strategy is equally important. Knowing when to take profits or cut losses can prevent emotional decision-making.
Exactly. Setting clear targets helps maintain discipline and can be a crucial safeguard against market swings. Emotional trading can be detrimental.
Moreover, using stop-loss orders can act as a safety net. They can help automate selling decisions rather than relying solely on market sentiment in the heat of the moment.
That's a solid strategy. Additionally, maintaining a long-term perspective can help investors avoid getting swept up in short-term market fluctuations.
Definitely, those who keep their eyes on long-term goals are less likely to panic during downturns. It's all about aligning investments with one's risk tolerance.
Yes, understanding personal risk tolerance can dictate investment choices. This self-awareness can lead to more confident investing.
And it's essential for sustainability in this volatile market. Rushing into investments can lead to regret, especially when the market turns against you.
Quite right. Evaluating each investment not just on potential returns, but also the risks involved is an essential part of being a successful investor.
And I think we should emphasize the importance of community resources. Engaging with knowledgeable circles can enhance understanding and provide more context.
Absolutely. Communities often share insights and analysis that can be invaluable. Networking with other investors can broaden perspectives and reduce the feeling of isolation.
And in the age of information, effective communication within these communities can help counter misinformation and provide clarity.
Exactly. It's vital to cultivate spaces for constructive discussion, especially in an environment where misinformation can circulate rapidly.
You're making a good point. Forums and social media platforms can serve as both tools for education and, unfortunately, sources of confusion.
That's why critical thinking is essential when engaging online. Not every opinion is backed by research or logical reasoning, and discernment is necessary.
Well said. As we navigate this cautious phase, maintaining a curious yet skeptical mindset can help investors make sense of the noise.
Absolutely. Constantly questioning the information we receive can lead us to more robust investment strategies.
And aligning with trustworthy sources can provide a solid foundation for our insights. It's all about creating a strong knowledge base.
Yes, reliable content can empower investors to make educated decisions rather than acting out of fear or speculation.
Exactly. Fostering a knowledgeable investment environment can lead to healthier market behavior overall.
In this way, we can contribute to a more sustainable crypto ecosystem. Education and awareness should be at the forefront.
Definitely. I think as we continue to explore this topic, we should also consider inviting experts for deeper insights.
That's a great idea. Having diverse perspectives can enrich the dialogue and provide listeners with valuable takeaways.
And it could also help bridge the gap between seasoned investors and newcomers alike, creating a more inclusive community.
Right. Knowledge sharing is fundamental in building confidence and understanding within the crypto landscape.
Speaking of confidence, what do you think will be the next trigger for market movement? Any indicators we should keep an eye on?
Well, upcoming regulatory announcements could act as a catalyst. Additionally, any technological advancements within major blockchain networks can sway investor sentiment.
Those are good points. It's important to monitor not just the news, but also on-chain metrics that can provide insights into market health.
Yes, on-chain analysis can reveal user activity levels and momentum shifts, which are often leading indicators of price movements.
That's right. Tracking such data can empower traders to make proactive decisions rather than reactive ones.
Indeed, it's a proactive approach that can help manage risk while positioning for potential gains.
And as we wrap up this discussion, let's reassure our listeners that this cautious phase isn't inherently negative. It can lead to stronger market foundations.
Well said, Sabrina. Corrections can create valuable opportunities for those who are prepared and patient.
Exactly. Let's encourage our audience to remain vigilant and informed and embrace this time for growth.
Absolutely. This cautious phase provides a unique set of opportunities for strategic investors. Market corrections often sift out weaker projects, allowing only the most resilient assets to thrive. This consolidates the market and can lead to a healthier ecosystem. Thus, while altcoins may be lagging, we could see stronger players emerge.
That's a valid point, Chase. Investors should focus on the fundamentals of these altcoins, searching for those with solid use cases and development teams. It's crucial to avoid the noise and focus on long-term viability.
Exactly, Sabrina. It's about doing your homework and understanding what each project brings to the table. The current phase may appear dull, but it can be a time for refinement and realignment.
And as we see this cautious sentiment, it's also essential to consider macroeconomic factors. Inflation rates and regulatory updates continue to shape investor sentiment in the crypto space.
Right. The interplay between crypto and traditional markets is more pronounced than ever. When investors are uncertain about stocks, they might seek refuge in more established cryptocurrencies.
That's so true, Chase. The volatility of crypto means it can be seen both as a risk and a hedge, depending on market conditions. It's a balancing act for many investors.
Precisely. And this is where research into different tokens and their correlations with traditional assets becomes vital. Understanding these dynamics helps in crafting a well-rounded portfolio.
And let's not forget the psychological aspect of trading. Fear and greed can drive many decisions, especially in a turbulent environment like this. It's essential to stay grounded.
Absolutely, Sabrina. Emotions can cloud judgment and lead to hasty decisions. Establishing clear investment criteria can help mitigate those emotional responses.
Right, having a solid strategy makes a difference. It allows investors to stick to their plan rather than react impulsively to market swings.
Exactly. Patience is a virtue in crypto. Those who can hold through uncertainty often reap the rewards when the tide turns.
And it's also important to highlight the role of community sentiment. Social media and online forums can greatly influence perceptions of altcoins during these phases.
For sure, platforms like Twitter or Reddit can create waves of enthusiasm or fear. However, discerning the credible from the noise is crucial to informed decision-making.
And here, due diligence pays off. Follow influencers who provide analytical insights over mere hype. Quality information can lead to better investment choices.
Exactly. Following experienced analysts who focus on fundamentals can help filter out the sensationalism. This way, investors can align their strategies with real market trends.
And part of that alignment involves keeping abreast of regulatory news. Different regions are moving at their own pace, impacting market dynamics significantly.
Right, regulations can either bolster confidence or instill fear, depending on how they're perceived. Investors need to understand the implications of these changes.
Indeed, and being compliant can also protect investors from unforeseen risks. This reinforces the importance of understanding the regulatory landscape.
Absolutely. Compliance is not just a legal obligation. It can also enhance credibility for projects. That credibility can lead to increased adoption and ultimately value.
And as we see projects striving for legitimacy, it's fascinating how some are already integrating traditional finance practices into their operations.
Yes, that blurring line between crypto and traditional finance may lead to more mainstream acceptance. It's a promising development for the entire sector.
Certainly, this convergence opens up new avenues for institutional investment, which could stabilize prices over time. The more institutions engage, the more established crypto will become.
For sure, but this equilibrium also introduces new challenges, like increased scrutiny and potentially more regulation. It's all part of maturing as a market.
And while some investors might shy away from this volatility, it's essential to remember that established patterns can provide insights into future movements.
Absolutely. Historical data can guide strategic decisions. Observing previous cycles can help in predicting potential outcomes.
And while it's exciting to look at the data, one must also consider the human element in trading behaviors. Market psychology plays a massive role.
Well said, Sabrina. The herd mentality often leads to irrational exuberance or panic selling. Recognizing these patterns can help investors stay ahead.
Precisely. It's crucial for investors to develop a mindset that allows them to remain level-headed during market swings.
And that involves continuous education. Staying informed about market trends and technological advancements can make a significant difference.
Absolutely. By remaining educated, investors can make better informed decisions and avoid costly mistakes.
And let's not discount the importance of networking within the crypto community. Engaging with other knowledgeable individuals can enhance understanding and insight.
That's critical. Online and offline meetups create opportunities for collaboration and knowledge sharing. It's a great way to build a support system.
Yes, connection within the community can also lead to discovering new projects worth exploring, especially during cautious phases.
And as we explore new avenues, we must remain vigilant about security. The rise in scams highlights the need for robust security practices.
Definitely, as the market evolves, so do the tactics of malicious actors. A vigilant approach to security can save investors from significant losses.
And that means being cautious about where and how crypto assets are stored. Cold wallets, for instance, offer enhanced security compared to exchanges.
Exactly. Educating oneself on secure storage methods can mitigate risk. This should be a top priority for any serious investor.
For sure. And as we invest and store, using multi-factor authentication and other security measures strengthens overall protection.
Absolutely. Layering security measures is vital in this landscape. It's better to be overcautious than to face the consequences of a breach.
And it's a reminder that while the market may present opportunities, it's crucial to be aware of the risks involved. A balanced approach is key.
Indeed, this conversation really emphasizes the need for a holistic understanding of the market. Preparing for risks while remaining open to opportunities is foundational.
Exactly, Chase. As we conclude, let's remind our listeners to embrace this cautious phase as a time for growth, learning, and strategic positioning.
Well put, Sabrina. Staying informed and adaptable will ultimately lead to successful navigation through the ever-evolving crypto landscape.
To sum it up, whether it's seeking quality assets or enhancing security, a thoughtful approach to investing ensures resilience even in cautious times.
Absolutely. Thank you, everyone, for tuning in.
Speaking of which, did you catch the latest news on those ETFs?
I did. It seems like the SEC is finally warming up to the idea.
Which could potentially bring in a whole new wave of investment.
For sure, it would legitimize Bitcoin even more in the eyes of traditional investors.
And that could lead to more stability in the market.
But we also have to consider the regulatory environment, right?
Absolutely. Regulations can make or break the momentum.
There's always that balance between innovation and regulation.
And with Bitcoin, it feels like that balance is constantly shifting.
Exactly. But one thing's for sure, Bitcoin still captures the imagination.
It does. It's the original cryptocurrency, after all.
So do you think BTC will ever lose its dominance?
That's a tough question. There are some strong contenders, but Bitcoin has the brand.
And that network effect is hard to replicate.
Exactly. Plus, its scarcity with that 21 million cap keeps it attractive.
So even if we see fluctuations, the long-term outlook seems promising.
Totally. But it's important to stay informed and cautious.
Absolutely. Which brings us back to our main topic of risk management.
Right. Let's dive into how to effectively manage.
Fills that role.
And the institutional interest is still there, even with the volatility.
Exactly. Companies are still adding Bitcoin to their balance sheets.
Speaking of which, did you catch the latest news on those ETFs?
I did. It seems like the SEC is finally warming up to the idea.
Which could potentially bring in a whole new wave of investment.
For sure, it would legitimize Bitcoin even more in the eyes of traditional investors.
And that could lead to more stability in the market.
But we also have to consider the regulatory environment, right?
Absolutely. Regulations can make or break the momentum.
There's always that balance between innovation and regulation.
And with Bitcoin, it feels like that balance is constantly shifting.
Exactly, but one thing's for sure, Bitcoin still captures the imagination.
It does. It's the original cryptocurrency, after all.
So do you think BTC will ever lose its dominance?
That's a tough question. There are some strong contenders, but Bitcoin has the brand.
And that network effect is hard to replicate.
Exactly. Plus, its scarcity with that 21 million cap keeps it attractive.
So even if we see fluctuations, the long-term outlook seems promising.
Totally. But it's important to stay informed and cautious.
Absolutely, which brings us back to our main topic of risk management.
Right. Let's dive into how to